Welcome to Easy Futures, where we talk about the future, megatrends, big forces, disruptive change, and how the world is going to change. And then we talk about how you can invest in that future and get real value for yourself. My name is Graham Codrington, and what I do for a living is I look at the future. I try and track trends and help companies to take advantage of the changing world. But at Easy Futures, what I'm doing is going a step further and talking about how I would invest in some of that future. And I'm putting my money where my mouth is and actually investing some money in a portfolio, and we're going to track it together to see whether this approach to investing actually works. Now, in our last video, Lesedi from Easyequities and myself were talking about e-commerce and home deliveries. And both of us really said that, we've increased our spending during COVID lockdown, and we absolutely think that e-commerce and home deliveries is going to continue to grow in the future. I don't think we need to be rocket scientists to make that prediction. That seems to be fairly obvious. So if you wanted to invest in the future of home deliveries and e-commerce, you can invest directly in any of the big e-commerce companies that might be listed directly, but some of them are not listed. So Takealot is probably South Africa's most well-known e-commerce company, but they're not listed on the stock exchange. You'd have to buy their holding company, in that case Naspers. So that would be an example of how to invest in it. You could do the same by buying any of the retailers, so Pick n Pay, Woolworths or whatever, but there you're opening yourself up to all of their operations, not just their e-commerce and home delivery side. Another way to do it would be to invest in the courier companies. So RAM or RTT or any of the other courier companies. But again, those are not listed, so you might have to look at investing in their holding companies. So what we're trying to do here at Easy Futures is Lesedi has challenged me to put my money where my mouth is and actually buy one of the stocks that we talked about in the last episode. This one was a little bit tougher. I probably, if I could invest directly in one of the apps, I would probably invest in Checkers 60/60. I think Checkers have the broadest spread from the low-end income people all the way up. Their new premium brands are unbelievable, and the 60/60 app is differentiated from the other apps in the way that it works and their brand promise and so on. But you can't invest directly. So I might want to put a little bit of money. In fact, I think I'm going to put just a little bit of money into ShopRite, who kind of own that, and see what happens there. It's a bit of a more of a risky one because it's not directly in e-commerce. And then I probably want to invest in one of the courier companies. So if I'm sticking with my ShopRite team, their joint venture with RTT is worth looking at. And RTT, again, are not listed themselves, so I need to look at their holding company, which is a company called Ethos Capital. They've got 22 companies in their portfolio, and I'm fairly happy with most of the other companies that they've got. Looks interesting. Their shares done reasonably well. Lesedi mentioned this in the previous video, so might have done better if I'd bought them a year or so ago, but I'm still going to go for it, put a little bit of money into Ethos Capital. So don't copy me, don't just do what I'm doing. I'm just trying to help you to show the thought process of the work that I've done to choose what I'm going to invest in. You can come back in a few months' time and see whether that investment paid off. I think we're probably going to have to wait a year or two for this e-commerce revolution to make its way through the financials of ShopRite and Ethos Capital. But let's see. We'll come back in a few months' time and see how this investment has done. So easy.